In Europe, generally, as you know, the markets have been a bit more muted in terms of performance. But speaking more generally about the UCITS ETF wrapper, which is now a truly global wrapper, being adopted by, of course, investors here in Europe, but also in Asia and Latin America, I think we've seen three very distinct trends emerge from the flows there. First and foremost, I would say the proof of concept of UCITS fixed income ETFs. We've been through a huge stress test on credit markets, on liquidity, and what we have seen is those products hold up very well and behave as investors wanted them to behave, and subsequently see very, very significant inflows. Secondly, I would say the proof also of ESG investing, of not just being, let's say, a fair weather investment thesis. It's something that we see now as being structural. And again, we've seen those flows into ESG products not only stay stable, but accelerate. So we didn't even see outflows on ESG products. And thirdly, and maybe quite interestingly, we've seen actually investors, I'm speaking more locally now here in Europe, really shift their investment thesis and views and adopt products at a much faster rate than we've ever historically seen. And I think the best example of that is flows into thematic ETFs, which have been around for a few years in ETF wrapper. Some have done quite well, but we've really seen an acceleration of investors taking exposure to those products, particularly those focused on things like millennials or the digital economy, which does make a lot of economic sense given the environment we are in currently.